Hey there everyone, Fatty for Pack-a-Punch Traders. Gonna do a quick video reviewing the week. Only had 4 trades on the week. I didn't trade Thursday or Friday. Friday took most of it off, so went ziplining. That was pretty fun. But let's get into some lessons here. And right off the bat, main lesson from the week, I'll have to say, being okay with letting plays run and not letting plays get to you so you make an emotional mistake later on, trying to chase it, thinking, oh my god, it's been going up this whole time. If it makes another high day break, who knows? The thing might just take off. Um, BWV was that lesson. I think I did not take a big portion of this. I really just got this little quick move here. And the lesson from that was really being patient over these high volume red candles. You really want shorts and other sellers to get filtered through. That is an area of conviction for them. They're shorting into it, they're selling into these key areas, and if it fails to break down and we're getting high demand, that could really trigger a whole entire move as an area that was super strong now is very weak, and all these shorts are going to have to cover that they are wrong. I swear, if you go on any short sellers Twitter, I follow a few, um, BWV, yeah, they were trading it here in the morning and whatnot, and so many people were cutting losses in this area, and that's why we got even a more aggressive move here, because this is that confirmation to them that it's not going to break down, and then you play it safe. That leads to more covering. So being patient is really also another lesson. Not rushing anything, because there's times where it'll just blow right past the breakout level, and you'll start maybe wanting to buy right through the break each time, but buying into the spike and chasing is not a sustainable strategy. It will bite you in the ass at one point, and it's going to be a bad one. So play it safe, be patient. You don't need to get into a play at any cost. Let it show you that it is worth getting into. And BWV, I was just not really paying much attention to it. I had other stuff to do that day, but this really would be it right here. Late day, you got the higher lows, the volume starts increasing, and change the timeline. Look what it looks at. Look at what it looks like on various times, because if that 1 minute is too choppy, bring it to 10, 15 minute, maybe 30 if you need. But here you can really see the failure breakdown. It holds 4, volume completely dies near that support area, just no pressure, pushing it lower, and from there you get a little bit of buying. It increases slowly, holds key levels, VWAP, and then takes off. And with a play like this, so you got the patience lesson, as well as you got to be okay with letting this thing go. Because if you're chasing, sure, in this case, it might pay off, but depending where, you might get really faked out. Some of these pullbacks here, we're getting aggressive, and each time this breaks a new high, you're looking at this thing taking off, right? So here, late day, what happens? It gets stuffed, and that's why I don't chase plays that are up a lot on the day and that have kept squeezing higher and higher. Although they might be able to continue higher, I'm not going to risk it. I see the odds fading the higher it goes from the breakout level. So really the main entry points would have been in the 4s, maybe the 5s, as you got another pattern, the higher day break pattern. So don't chase, be patient, let the plays come to you. Um, and that's really it. And be okay with missing plays. There's MEGL as well earlier in the week. I think this was on Monday. Multi-day bounce. Very nice play. I took it pre-market, stuck to my 20 to 30% spike average, and what did this thing do? Take off. So, could have been emotional, try to play this thing, and in this case, yeah, you know what, it might have worked out depending where I got in, but more times than not, it's not going to work out. Play it safe, live to see another day, don't risk your hard-earned money foolishly. So, that's really the spiel on the week. I had one loss, SDC. It was a breakout, and good thing I size in slowly sometimes, because I was not convinced here. I saw a little bit of perk in the volume, and I was looking for the confirmation after this nice green day, but volume just really wasn't there, and the price action was pretty weak. each time it would spike, it would get stuffed. It had a hard time really breaking through and confirming the low twos as support. Here we are here. So I was getting at 212, slowly sizing in. I wanted to add if this were to keep holding up and volume to pick up to the buying side, but as you can see here, it failed. And where I usually risk is going to be a key area where I think the price, if it cracks, is going to bring in even lower prices because the chart would be broken and the momentum would be now on the short sellers side. So here we are right around 2. It was cracking VWAP. So I saw that as an area where I want to get out as it could even plummet more. So 212 to 202, just a $50 loss, only 500 shares. I never got the size I wanted in there, just my starter. So that was good to see. But you know, losses are part of the game. Not every single breakout is going to work out. We have to judge it. That's why we study volume and price action, trend and history, level 2, and all this good stuff. So cut your losses quickly. And speaking of cutting losses, I feel like as though I talk a lot about the multi-day bounce, how to play it, but I never really talk about how to risk, because it's such a reliable pattern that I always talk about where to sell. But let's go over where to risk off of. Let me just think of some examples here. BWV. This actually might be a great example because it did, technically, looking back at it, have a quick little fake out. There we are. So for those who might be a little undisciplined, could have been getting it in the 430s in this area. It did show a momentum shift, but it didn't consolidate 3 to 5 minutes like I usually like to see to show that it is holding up. It's not just having a push higher that could easily get stuffed. It's giving a perk higher, it's holding up, not breaking down, and it's going to come back to the high of daybreak and push higher. That's all showing strength to me for the momentum shift. But here, say, you know, you get into something like this. Usually, where I would be risking would be the day low, because that would be the area where I'm seeing that the sellers are still in control. If we're looking at the high of daybreak to be the area where they're losing control and buyers are coming in, if it continues lower to the downside, breaking to new lows, that's going to be the best place to cut, because that will be kind of the range. If it's holding the day low, it might honestly still have a chance of coming back and breaking the high of day and squeezing higher. But if it's continuing to push lower, that's not the momentum direction that we want. We're wanting it to push higher, and we're going to react to that momentum. So in this case, if you're in somewhere in the 430s or 440s, you got about 5% risk pushing it if you're in the 440s. Here at the day low area, around 410. Let me think here. MEGL. What did this one look like when it had bounce? So typically what I'm looking for is going to be the day low, momentum-wise. Just thinking of the pattern, how it should be executed. The day low would be the best place to exit. But at times, that's too far of a risk sometimes. So let's see here. You got the day low of 920, and you got a high of about 1017. So you're risking about 10%. If you're comfortable with that, if you size in with small size and that 10% risk is not much, and then you size up slowly and you bring your risk up higher as it proves itself, that's one thing. But if you're coming in here with some decent size and you're risking 10%, I wouldn't really risk that day low. I would wait for a convincing crack of VWAP or another area where on the chart it showed some bottoming, where it's had maybe some higher lows off of the bottom. For example, like this, for example, if I was playing the 1148 break here, I would probably be risking somewhere around the VWAP area here, even though that is bigger than the 5% risk that I want. I would probably go in with small size on this, but I know percentage-wise this isn't really exactly what I'm talking about, but what I want you guys to understand is we're looking for the key areas on the chart to where if it breaks, momentum is not on our side, and we should get out because it will be dangerous to hang on. And at first, that's going to be the day low. and it keeps holding trend, key levels, after you get some more consolidating, if it wants to push up higher, this should be a decent new area to risk off of, because now that is where people's eyes are at. If it breaks that key area, it could really break down more because it held up there. Shorts were not able to push it lower. Buyers came in and held it. So if it breaks down, buyers might stop out, and that could push it even lower. Shorts will be adding to a position maybe. So think of these key areas like that. I know I talk a lot about like 5% max loss and whatnot, and that is important to do. That's important to stick to at times. But if you're going in with such small size, if you're risking that 10%, it might not even be as much as if you were going with your regular size risking 5%. But at the same time, if you start doing that stuff, you know, it might be a gamble. You start going in with small size just to risk a good amount. But beside the point, really what I want to talk about is just these key areas, what to look for, and why we could risk off of these areas. So, hope that was useful. We'll catch you guys later. Give us a thumbs up, subscribe to our channel. Besides that, I got the video lesson on the top plays up already for tomorrow. So check that out, and let's be prepared for tomorrow. Have a great one, y'all.